Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, we've only got 7 days until we have the US presidential election and also the RBA rate decision. Looking at the Australian dollar, as the dollar index is attempting to recover when now it's got above the level of 93.00, is that the Australian dollar is also trying to rise. I do feel the market's going to end up in a bear trap. What I mean by that is that as the bulls continue to climb, it won't participate further than beyond the 71, 80, 90 level, as the bears may probably ambush the challenge and look back towards the downside, because we see the resistance level here, which is around 71, 75 to 80, and also the 60-day moving average, which is around 71.90. It is also noted that as the indicators with a weak MACD, the RSI is relatively firm as it holds above the midway point. So let's view the fact that we could see at least towards that challenge and fail, and eventually turn around and look back towards the downside and eventually reach its objective. It is anticipated not by myself but by many economists around the market that the RBA is poised for a rate cut, and we could see a move from 0.25 to 0.10 on Tuesday, which is also a Melbourne Cup. And the last time we saw a cut was 10 years ago. So this will be the second time the RBA, if so, participates on that special occasion. The US dollar, as I mentioned, is slowly ticking up and therefore views the euro fall away further from that 118.80 level and now cuts 117.70, 80 support. This entails further weakness, and I do anticipate, as the MACD is nearly supporting the RSI decline, that we could see a move to 116.70, 80 as an objective, and a base holding close to about 116. Nevertheless, any upside attempts should fail. I feel the market should progress slowly and do be very thoughtful on how you risk manage your positions. Purely for the fact is it's going to get a little bit noisy and a little bit erratic as we get closer to the 3rd of November. So do keep that in mind and adjust your levels accordingly to your risk management when it comes to take profit and stop losses. When it looked to dollar yen, well, the call was at 104, and now we're pretty much claiming that level as we got a low of 104.19. Now keep an eye on this, because if we don't hold there, then we could see a further drop, and we do need to run to the longer term. That is, there's not a lot of support if we go through this level at 104. Support is very much deep to around 101. We are trending on a weekly, and we are negative on the 2 indicators. On the dailies, we are trending and also negative. So let's see if the market can challenge. And as I mentioned before, accordingly to your risk management, do adjust in case we do get a rejection, because previously was quite aggressive. It went from 104 up to 105 very, very quickly. And we may see this pattern again. But if the pattern continues and if the primary trend holds, then we may see a break of 104. So it is a little bit of a uncertainty as we get closer to this level. But I do notice one thing is that sterling yen has actually progressed further on the strength of the yen leg, and therefore could see a break of 135.70. And if so, look down towards 134.40. It was a bit of a touch and go earlier when we got close to that 138, but from the current pattern and with dollar yen, with yen strengthening, does imply that we could see a further break. And if so, and if we get a break of the trend line here, which is around 129.70, 80, that would also support the sterling yen to decline, as the pound leg will get weaker. But just be aware that this trend is pretty much holding quite firm at the moment. But the RSI is questionable. The gold, well, as you can see, is very lackluster price action over the last 4 trading days and still hugs at 1,900. It would seem that the market's waiting for eventually the announcement to the presidential US presidential election, and therefore could see a little bit more noise. I'm in favor of seeing a decline at the moment due to the fact is, if we look at the broader picture, is that the MACD is still quite heavy, and with the break of these couple of support lines that are holding here at the moment, does put a further play into the bearish sentiment. Let's see if the market can continue to 1,893. Wrapping up with oil, well, we did see a challenge up to $39.90 as the tropical storm Zeta, I believe it is slowly closing in. This could give a little bit of uncertainty in terms of supply, and if so, and they do shut down a few of the facilities, then we could see a bit more of a turnaround in oil and see a move back to that topside range again. Getting close to the support of $38, but do note beneath there was little support until around about low 36. But technically, we are soon expected, I believe, to see a correction back to the top side, either 39 or up to 41, 70, 75. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the rest of the day.